Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your Asset Management Report. Today is Thursday, March 6, 2008. Co-head of investment management at Goldman Sachs, Peter Kraus, will retire at the end of this month, according to an internal memo from Lloyd Blankfein, CEO. According to the Financial Times, Kraus helped build Goldman's investment management business into one of the largest in the world, with nearly $1 trillion under management. However, the business has been buffeted of late by the poor performance of several in-house hedge funds, including Global Alpha, the bank's flagship quantitative fund, which lost 40% of its value last year but is up slightly this year. People close to the matter told the Financial Times that Klaus's retirement was not related to the hedge fund performance. Staying with asset management news, Phil Duff, who 2 years ago sold hedge fund manager Front Point Partners to Morgan Stanley, has launched a firm to help institutions such as pension funds, insurers, and endowments meet long-term funding obligations. According to Bloomberg News, Duff Capital Advisors will manage money and advise clients on investments including hedge funds, private equity, and real estate. It sold a $500 million stake to Lindsay Goldberg, a New York-based private equity firm, and bought the assets of Azimuth Asset Management of New York, which farms out money to hedge funds and sells risk management software. Duff told Bloomberg the Greenwich, Connecticut-based firm will use in-house investment teams and outside managers. And in other asset management news, beleaguered Canadian stock markets began to bounce back as investors pumped an estimated $6.2 billion Canadian dollars into mutual funds in February, the key month in the registered retirement savings plan season. Managing Director of Fund Research at BMO Nesbitt Burns, Peter Locke, said yesterday in an interview with the Globe and Mail, quote, "The global market recovery helped to buoy sales in February." The Investment Funds Institute of Canada said mutual funds in January attracted only $460 million Canadian dollars. And in asset management news in Asia, more than high net worth individuals and day traders will be hit by the Indian government's budget proposal to scrap the I-T-rebate on the securities transaction tax. If broking circles are to be believed, it could also affect the ability of fund houses to churn their portfolios effectively, reports the Economic Times of India. The proposals relating to the securities transactions tax are expected to push up the tax liability of a day trader and thus squeeze his returns. This could lead to a drop in trading volumes, says brokers. This lack of liquidity could in turn push up the impact costs for fund managers, thus affecting their net asset value. And that rounds out today's Asset Management Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our Asset Management channel online and read the latest developments.